Welcome to the Private Lender Podcast with your hosts from Hard Money Bankers, Jason Balin and Chris Haddon. This podcast is sponsored by hardmoneymastermind.com.
Hey guys, another episode of the Private Lenders Podcast. Chris and Jason here. As always, thanks for checking it out. Today we're going to be talking about the different types of asset classes you can lend on if you have access to private capital. One announcement real quick. We are just over 2 weeks out from our in-person mastermind meeting here in Columbia, Maryland. It's the 3rd and the 4th of November. First in-person thing we've done in quite a while. We're super excited about it. We actually have one spot left. So if you want to move fast, it's just over 2 weeks away. Check out Hard Money Mastermind innercircle.com and schedule an appointment to talk to Dave, our program director. He'll tell you all about it, in addition to what you can read on the site, of course. Hope to see you here. Okay. So when we're talking about the different types of real estate that we and probably most private lenders are comfortable lending on, it breaks down by a few different categories, right? And I'll start with the first one, and I'm sure Jason's going to have a lot to jump in on a few of these things. The main asset type that we and most lenders like us are lending on is investment residential fix and flip deals, right? In the median housing price. So in your normal suburbs and city areas where, in our area, maybe they're buying properties for $250,000, say, maybe putting 80 or 100 into it and selling like in the fours, maybe in the fours, low fives, something like that. That's the bread and butter of this business. It makes up about 80% of our loan portfolio. 80% of the units, maybe a little bit less in terms of like loan volume, because we're going to talk about some other stuff that can get bigger in terms of loan amount. But that's the bread and butter, right? You got quality real estate investors that have experience. They've done this before. They know how to run a job. And that, for the foreseeable future, for anything we can see, is going to be the bread and butter of our business.
Yeah, like Chris said, investment residential, fix and flip, median housing price neighborhoods. That's typically where the core of this business is in. That's not to say that you can't be in the lower end areas or the higher end areas, but median housing price, starter homes or homes that are kind of like, these investors move up into, second homes after median housing price neighborhoods. That's the best way to say it. Depending on what market you're in, median housing price neighborhoods. So obviously some of these are fix and holds where investors buy these for their rental portfolio. When you underwrite those, you got to underwrite a little bit stricter. I mean, you want to be strict across the board, but if somebody's buying a property, their plan is to fix it and put a renter in there. Obviously, they need good credit because you don't want to hold on to these loans forever. You need for them to have an exit strategy. Their exit strategy is to get a bank to finance them. So they need to have good credit, and they obviously got to be bankable, which means they have to have filed tax returns or have W-2 income and things like that, which is fine. So another additional asset classes you could potentially get into, which we've done for over a good amount of years as well, is small balance commercial. There's always an unserved unserved market for these small balance commercial deals for a few different reasons. Number one, not that banks don't want to get involved in them, but the smaller banks potentially do, the bigger banks don't. And the reason why is there's just not enough money in some of these deals. And it's the same amount of work to underwrite a $400,000 deal as it is a $4 million deal or a $40 million deal or a $400 million deal, right? And a lot of these banks want to do higher, they want to deploy larger sums of capital at once and not mess with the $200,000, $300,000, $400,000, $500,000, $600,000, $700,000, $800,000 small commercial deals. And there is a gigantic market where it's hard to get capital on them. And there's some very, very good opportunities. We've done loans on offices, obviously multifamily stuff. That's more in the residential stuff, but multifamily, office, retail, self-storage, light industrial, restaurants, things like that. Obviously, the due diligence is different. We'll talk about some of that here in a second. But in essence, you're writing a loan to a qualified borrower that has a good asset, that has skin in the deal, that potentially cash flows. Depends if it's a straight bridge loan or if it's something that's already income producing, and you treat it like anything else. The one downfall of a commercial asset is the exit strategy. And what I mean by that is, we all know in the residential space, there's a very easy way to determine like a 30-day liquidation value on a property. That's one of the metrics that we use. Like, what's my 30-day liquidation value in my current exposure as is, after the project's halfway renovated and after it's fully renovated? Like, how quick will another investor buy this if we had to foreclose on the property? Residential, that's an easy number to determine. Commercial is a little bit different, right? Because whatever, there could be a tenant in there, it might be completely vacant, whatever the case is. It was built out for the current tenant's liking, but that's not the highest and best use of what that building could be doing. So there's a lot more variables that go into that. Point being is, definitely consider investing or learning to invest and to lend on those types of deals. It's a great way to be able to deploy larger sums of capital. And if you structure it the right way, it's obviously, just as low risk as the fix and flip stuff.
Yeah, for sure. Maybe even lower, because we don't do construction on those. So like you started with, and I want to emphasize, is that there is definitely a gap in the market in the small balance, like 500K to 2 million, in terms of capital that could provide loans for those situations. Because if you talk to most big commercial bridge lenders, their minimum loan amount is 2 million. And they don't even like those, because their average loan amounts are 10, 20, and 30 million, right? So those are tiny loans to them, and they're huge to us, right? Like if we're like, oh, we have $1 million loan in the pipe, that's awesome. That's because it's big to us. And to other people, it can be too small that they can't even mess with it. It's not even worth putting their people on it, which is interesting, right? Another
Hold on, sorry about that. Chris's internet's breaking up. And even though we're sitting next to each other in the, in different offices, we're on different computers. So while Chris hops back in, I will, I'll step right back in. So related, and maybe we should have started the show with this, related to underwriting assets in general, I'd always recommend sticking to real estate collateral that you're comfortable with. And if you're not comfortable with it, you need to get comfortable with it, right? If you're only comfortable doing fix and flip stuff because you have rehab properties before, maybe you're a real estate agent before, or you've owned rentals, that's fine. Stick to that. And if your whole business is based on that, that's okay, right? There's nothing wrong with your entire business being just based on that particular asset class. When we started, for the first 5-6 years, we only did fix and flip. We didn't even do that many fix and rent, just because it wasn't all that prevalent in the market back then. But that's what we knew. We came from being real estate investors and being in the residential world, and we knew that. And then as we grew our experience level and our comfort level and our capital base and we wanted to deploy more capital, we started investing in owning commercial buildings along with lending in commercial stuff. So I would stick at the beginning to the asset classes you're comfortable with, and then work your way up to, as you get lead flow and as you create relationships into other types of asset classes.
Hey guys, I'm back. Sorry about that. I got booted offline here in the office real quick, but a couple more notes on that for some people who might not have a commercial lending background, and there are easy ways to get up to speed. So one is, it's best to lend on loan to cost, right? Somebody's buying a property for $1 million, you put up 500, they put up 500. There's going to be not much underwriting required. There's going to be more stuff that goes in the file, which we can talk about, but we don't like to get into a situation where we really have to depend on a very detailed underwrite of the income of a property. Yeah, we can do it, and we have banking background, and we can underwrite NOI and cap rate and all that stuff, sure. But that's not really the loans that we choose to do. Like, these aren't permanent mortgages. They're not 80 LTV, 20-year term, right? So we're really just lending off cost, and cost can be a purchase price, or it could be, hey, they bought it for this much and they put this much into CapEx. And so that there's your cost. And that's going to be a conservative valuation, but a safe one, right? And that's basically where we live when it comes to the small balance commercial. So an easy way to get up to speed on what goes into a file would be to do some searching online and find an underwriting checklist from a bank for commercial lending. And there's going to be a bunch of new stuff on there that you're not used to, right? Like UCC 1 or phase 1 environmental, like all the stuff that goes in there. We don't have to break down the entire checklist now, but there are different things that go into the file that you should be aware of, but they're not anything crazy that you're not familiar with. It might not be like totally you work with them every day, but it's all logical stuff that goes into a loan file. There's just more boxes to check than in a resi deal.
Yeah. And keep in mind, in this business of private lending that I think a lot of people get away from is just because somebody has an opportunity they're bringing to you doesn't mean you have to fund that deal. You're only going to fund deals that you're comfortable with, stuff that you can wrap your brain around. We didn't lend on commercial deals for years because we couldn't wrap our brain around it. I remember a deal that a borrower years ago, like the first few years of HMB, a borrower brought us this deal that they needed a quick bridge loan on. They're buying it for $800,000 in Baltimore, and they needed a $400,000 gap. We would have been first mortgage of first ton for $400,000. They were bringing $400,000 plus closing costs to the table. We didn't do it because we just couldn't wrap our brain around it. And looking back, that was an easy home run deal, but we just didn't know. So we always encourage everybody to, whatever you're comfortable with, stick to, and then learn or test or do something. And I think everyone's scared to turn down borrowers because they think they're going to get a bad reputation, or that borrower is not going to call them in the future if they have another deal. Like that's as far as the truth as anything. Just be transparent and honest in the situation. If they call you and say, hey, I want to do this deal, this is a home run deal, why won't you lend me the money? Say, listen, I think this could be a good project for you, but honestly, I'm just not comfortable with it. We lend our own money or we lend our investors' capital out, and I'm not comfortable with it. I'd love to help you with this deal, but it just doesn't work in our current setup. If you have anything in the future, I'm happy to review it. Like, this is not an exaggeration. I've turned down tens of thousands, maybe hundreds of thousands of loans over the last 15 years. And it's been very rare. And I can't remember the last time a borrower got upset with me because I was honest about it and I was transparent about the situation. I turn down deals every day. I'm not turning down a deal that I want to do. Like, if it's a good deal, we're going to do the deal. But the ones that might be a good deal that we don't want to do, we have to turn it down. And I got to, and I'll tell them the truth. I'm not going to be like, whatever the deal, whatever the case is. Like, I'm going to be honest in the situation. So we'd encourage you to go out, find opportunities, take a look at those deals, see if you can wrap your brain around it. And you'd be surprised in this like small balance commercial space, there is a lot of opportunities, especially right now where the capital markets are in limbo. The rates are high. The closing time frames they take so long. Don't commit to closing this thing in a week like a regular fix and flip residential deal, even if you have the capital available. Give yourself some time. Typically we do 2 weeks because we want to order some due diligence to make sure we're comfortable with it. But definitely start entertaining it. There's a lot of different types of assets you can lend on as really good first lien positions, low LTVs, besides just fix and flips.
Yep. A lot of opportunity out there, especially now, especially with markets shaking up. If you are prepared and ready and have capital and everything to lend, we should be in a pretty good spot. We, being private lenders, moving forward here through this next market cycle. So like I started with at the beginning, if you guys are interested in checking out Hard Money Mastermind, innercircle.com, go there now, which is our offline meetup, high-level mastermind for solid lenders from around the country. Check out Hard Money Mastermind, innercircle.com, and we'll see you here next time on the Private Lenders Podcast.
We hope you enjoyed this episode of the Private Lenders Podcast. Please note that the opinions stated by all the speakers on this show are only opinions and not legal, financial, or accounting advice. Please make sure to always check with your own legal, accounting, and financial professionals. If you'd enjoyed this episode of the Private Lenders Podcast, we'd appreciate it if you spread the word. Make sure to check out hardmoneymastermind.com, the #1 free community for new and experienced private and hard money